This is Pat Walker at Mission Winners, and I'm doing a video here, a training coaching video from years of experience that I hope will help. It's really important. A lot of people, I have to share this with you. Years ago, I taught on the university level. I taught advanced level strategic planning classes. And I have to share this with you. It's really important to study and learn. And I'm not saying that because I was a teacher. I'm saying that because it's what sets you apart. It sets us apart from others. Many people just want to be spoon-fed and say, oh, whatever it is, I'll just do it. Instead of truly understanding why. To know, I say this a lot, and it's a fact. To know that 2 + 2 = 4 is knowledge. That's fine. All right? But to know why 2 + 2 = 4 is knowledge that is transferable to other situations. That's power. That's power. So what do we do with it in the context of charts? It's simple, folks. Study charts. Really study them. Don't just look at, oh, that's a downtrend line, it's below moving average. Okay, let's look at the next darn chart. No, don't do that. I encourage you, look at price and volume. Every bar talks. Some bars talk louder and are more important than other bars. It's a fact. I want you to think about some of the great investors through history. What did they do? Jesse Livermore, Bill O'Neill, Mark Minervini. What do? They studied charts. Studied them. I've been studying charts for 30 years. I love figuring it out. And I want you to think about this. If you remember this, that each one of these price and volume bars is a reflection of people's emotions. The emotions of fear, greed, panic, complacency. Every bar talks. When you start understanding that, it gives you a much better understanding of how to analyze the chart. And hey, folks, you don't need a dang PhD in psychology to do that, okay? So we're looking here. Look at how this thing's trending. Trending very nicely. Look at that. That's just beautiful. We're singing in the rain. Everything's just great. And then you get this kind of stuff. But I want to take it back in time. And I was going to do this before to avoid perceptual bias, but this will work. Here's the spiders going up. Up the moving averages. This is the 8-period exponential moving average. This is the 20-day. This is the 50-day. And this is the 200. You study price and volume every day. Look at how it was marching up. And this day right here when it hit new highs. Hit new highs for the entire move right there, folks. How was the volume? How was it? It was low. People talk with their mouths and vote with their pocketbooks. Guess what? They weren't voting. It was not a sign of strength. It was a sign of weakness. Now, is that a flag saying, hey, you better sell out? No, man, that's lame. But it is a slight warning sign. You like when stocks and indexes are hitting new highs on volume. Volume shows conviction. Lack of volume shows lack of conviction. Right here is a down bar. What does that tell us? They're selling. I want to show you a great study that will help you. It's going up. And it rallies, puts in a reversal bar, goes up, average daily volume, and drops on a big pickup in volume. Drops further on a big pickup in volume. And then it advances. Then it reverses down on low volume, and then it gaps down and reverses up on a pickup in volume. That's a plus. And then it gaps down and closes down at the 50-day on a big pickup in volume, folks. It's talking. Selling. But it finds support at the 50-day, and that's good to see. And then it rallies. But notice how it rallies on low volume. And then we get this bar right here where it gaps down and it drops, but it closes in the top half of its range. They supported it bouncing off the 20-day. The blue line is the 20-day. That's constructive. And then the next day, it gaps down and it closes right at the 20-day on a big pickup in volume. That's a red flag. They're selling. As I stated before, people talk with their mouths and vote with their pocketbooks. You don't need to sit there and watch anything on TV or any of that other crud. You can just study the charts and pick stuff up. And here it is. Advance it one day. And it opens basically unchanged and drops hard through the 50-day. Now I want to show you something interesting. It opened way down here. It gapped down huge and rallied all the way back up and then closed below where it opened. You see the close, that little hash mark there to the right and the hash mark to the left? That's where it opened. That's where it closed. It closed below where it opened. That is a negative. A negative. And then it gaps up and it drops again on volume. Folks, if you're owning it and it's losing the 20-day and it's losing the 50-day on that kind of volume and you're ignoring it, you're being really aggressive and you're not really being prudent in managing your risk and your portfolio. And you get this, does this, and then you get this, gaps down and it does this. That's wicked. That ain't mom and dad selling right there, folks. That's serious, serious selling. Then it gaps down and reverses up, closes in the top part of its range on extremely heavy volume. Advance it. Oh, look at this. It goes up. Everybody's happy. We might as well buy. It's back through the 200-day. People talk with their mouths and vote with their pocketbooks. How's this bar compared to this bar and this bar? How is it? Volume's much less. Much less. Advance it. Gaps up, runs up, and then reverses down again on another big pickup in volume. Folks, they're telling you, hey, we're selling. Are you listening? And no forecasting. You just get in line with what's happening. And now it goes up. Look at this. It gaps up, bouncing off the 200-day. Oh boy, this is it. This is the start of the rally. How's the volume on this bar versus this bar and this bar and this bar? How is it? It's not so good. And I'm keeping it clean. It's not so good. And then it drops again on a slight pickup in volume and loses the 200-day again. Notice the gap down, by the way. And then it gaps down and closes near the highs on a slight pickup in volume. Looks like support. You've got a higher low, but you're below the 200-day. A pretty simple maxims, folks. I really don't like stuff below the 50-day, and I really don't like stuff below the 200-day. All right? And then you get this. How about that? Look at that gap down. That hurts. That really hurts. Now, look at this. It gaps up and closes near the highs. But notice the volume on this bar versus this bar. Not so good. And then it drops down here. Less volume, but you're below the moving averages, folks. There's no power here, all right? Don't be a hero. As Ed Seykota says, there are old traders and there are bold traders, but there are very few old, bold traders. I had the great pleasure of meeting that man and talking with him one-on-one years ago. He's one of my heroes for what he's done in his research. I'll just tell you that. Some of his research is involved in this chart, by the way. But anyway, let's move on. He's a commodities guy. And then you get this. Look at that volume. Look at that gap down. That's awful. That's the stuff that'll just rattle your financial situation in your head. Oh, goes up. Everything's great. We can buy. You're below the 200-day and there's less volume than when they were selling it down. And then you get this. That hurts. Look at the gap. And that hurts. Does this here. This is the close today. How's the volume on this bar versus this bar? It's low. It's low. Moral of the story is this. Please be careful. Have a plan. Now, this is the last bar, could there be a bottom here? Is there a possibility? I don't know the future. Nobody knows the future. The people that call bottoms, it's an amateur thing. It's an ego deal. When you accept the fact you don't know the future, you're going to see it a heck of a lot clearer. I'm just going to share that with you and lay it out there. So here we go. It's got this bar here. Drops down, way down, has been falling the last couple of days on decreasing volume. Is there a potential? Now this is aggressive, but I have to share it with you. Is there a potential that this could take out these highs, the spiders could take out these highs and make a big bounce? Yes, it could. Will it? My crystal ball's in the shop. I don't know. But there's potential. It's something to be prepared for. You can say, really? You think so? Well, here's today. This is now. Let's go back in time. Remember that waterfall. Pretty hard drop right here. Reverses, falls, and puts in a higher low and starts to march. Is it going to do that now? I don't know, but it's something to look for. One note though, it is above the 200 day. Right here, waterfall down, waterfall. Check this out, this is so cool. Gaps like a rock on heavy volume. Inside bar, low volume. Outside bar, bullish engulfing bar, slight pickup in volume. And it marches for just a day, fritters around, comes back down. Now look at this bar. This is what we do. Look at the volume on this bar. The selling on this bar is less than the selling on that bar. And what's it do the next day? Puts in a reversal bar right in here, and it starts to lift. But it's below the 50 day. There's not a lot of power. Then you get this selling bar, drops down. But what do you have here? You have a higher low here versus here. You have a higher low here versus here. And then it starts to make a decent march. A decent march. See this higher low? Higher low? What do you see here? Higher low? Right there. This low is higher than this low. And you get a march. You see how you connect the dots? Now look at this one. You don't have a higher low here. But you did something interesting. You came down to the 200 day. Remember this. Remember the 8 day and the 20 day, but definitely remember the 50 day and the 200 day for bounces. Comes down to the 200 day and you get a bounce and a march. Go back. Comes down to the 200 day, bounce. Then you look at this one and you say, look at this going way down there. Look at that serious selling. But I want to show you something, and I'm going to do this for you to help you. It's dropping. It's below the moving averages. It's dropping further on heavy volume. By the way, if you're in this, you're not having rules and tactics to keep you out of trouble. You shouldn't be in this. You're below moving averages. And you can say, well, I'm looking for the bottom. Yeah, but don't own stuff looking for the bottom. There's times to be in and there's times not to be. Do not think, I can't stress this enough, please do not think you always have to be involved in the markets. Just because the market's open for business doesn't mean you need to go in the store and go shopping. It's a fact. I've been doing this since before the crash of '87. The market is an emotional animal and it will suck you in. So you've got to have rules and tactics and discipline. That's all. It's dropping here. It's dropping here. It's dropping. Look at the volume below the moving. Look at that selling. It's not mom and dad selling. That's serious. It's dropping. It gaps up. It drops. And you have a bullish engulfing bar here. The first one on a pickup in volume versus the previous one. And it goes up. Gaps up, closes down a little bit, but less volume. Inside bar. An inside bar is just a neutral equilibrium bar. Gaps down, closes up, less volume, but it did close up. And it's above the 8 day, folks. drops back down on a pickup in volume. What do you do with that? Uh-oh, you better be cautious. Gaps up and runs up. Where does it stop? At the 20-day. What do you have here, folks? You have a higher low. See it? See that higher low? Something to remember. A higher low. And you had yourself a decent run. Isn't that neat? The higher low. So there's things to look for. Go back. Waterfall down, bounce for a couple of days, fall again. Comes down to the 50-day, meanders for a while, then finally starts to pick up on a pickup in volume. The 50-day was rising. Waterfalls. When you see waterfalls, you have to look for a wide range bar that it reverses and can make a bounce up. That's nice to see. And then I'm going to pause and share this with you. And I say this a lot. Trends pay more than all the zigzag action. Look at this beautiful trend up the 20-day. Look at this beautiful trend up the 8-day. 8-day exponential moving average. Loses the line on a pickup in volume. Quiet bar, less volume. Inside bar, less volume. But notice, watch this. 8-day exponential moving average starting to curl down. You say, if it takes out the lows of these two bars, I better be dang careful. And it does. And look, folks, check this out. You think we're the only two people in the world? I hope there's more people listening than just the two of us. There's somebody else in my office, that's why I said that. You see these two bars? Quiet. But it's right at the 8-day. You gotta watch this, gotta make sure this thing starts to lift. And it doesn't. And it doesn't. How about that? Then you get a big reversal bar. You're frittering around. And then you get this. The moral of the story is you've got to be careful. But every once in a while, you'll buy right and you will catch a trend and a wave. And you let it work for as long as possible. I can't stress that enough. Now, here's the weekly. This is the weekly. This is today. This is now. Gaps down. This is the Spiders Weekly. Gaps down, falls, and it's reversing. And as of this point, all right, it's up near the highs of the week. Am I forecasting? No, I don't forecast. I don't know the future. But I will tell you this. Is there a possibility this could advance and take out the tops of this weekly bar and run? Well, here's the weekly. Take it to the daily. Here's the daily. See my price alert? Now, what will it need for you to get interested, folks? Come on, let's play hardball. You need this to take out the tops of these bars, this downward sloping trend line, and you needed to do it on volume. Now, let's suppose you do that. What's your game plan if it doesn't work out? What's your uncle point? Well, here's a fact for you. On bounces like this, which is a very aggressive tactic, I can't stress that enough. If it takes out these highs and starts to go up and then bleeds back halfway into this bar right here, the range of this bar, if it bleeds back here, you must sell 1/2 of your shares. Which leads to another very important lesson for you. Position sizing. I can't stress enough. Buy more shares on a long base breakout. Buy less shares on a pullback setup. Why? You always measure risk. This is riskier than a longer base breakout. You measure risk and you buy less. It's so important. I can't stress enough. Charts are nothing but a reflection of human emotion. The emotions of fear, greed, panic, complacency. Here's a weekly chart. Big drop down. Can it reverse and bounce? Sure. Weekly chart. Big drop down. Puts a reverse and bounce. Could it again? Well, it always has and it always will. Go back in time. Comes down and bounces. Reversal bar. Drops down, but look at that. Check this out. Right here. Basically have a double bottom. Falls hard, gaps down, falls, reverses, closes, but it's real whippy. So what do you do in a situation like this? This is a weekly chart. You manage it tighter. Don't get complacent. Don't get sloppy. Runs up, then pulls back, forms basically a double bottom, maneuvers around. You're going to have to manage this. Gaps down, falls and closes above the open, and it starts to make a second march with this shorter term double bottom on the weekly. Big drop down, shoots back up. Small drops, small drop. This is the weekly, okay? Small drops. So now what we're going to do, we're going to go back to now. This is today. Right there. Pulls back. Can it bounce? Well, sure. Will it bounce? I don't know. Do you? I don't know the future, but I do know this. It can tell me, and we'll be prepared. Here's the weekly. Here's the weekly still here. Bounces and reverses. Go back to the daily. You've got an inside bar. So no, just almost an inside bar. I'm sorry. So folks, you see that little price alert? This is very aggressive. But what would be your game plan? See, I have to challenge you on this, all right? If price takes out the highs of these two bars with volume, you may get a bounce. Notice I said may. I didn't say you will. May. If you buy it, where are you going to sell it? By gum, don't give it all the way down here to 237. That's too much. If this thing bleeds back into this bar right to here, right in here, you get 4 or 5 points. Don't go big on it. Buy small shares if it works, if it lifts, and if it falls and bleeds back into that bar, you'd sell half off. Now, is that aggressive? That's extremely aggressive. So by default, you have two choices here. All right? A, not do it, or B, do less shares. Be less shares. Big drop down sometime, and where's it going to be? I don't know the future. Nobody does. Anybody who says they do is a liar. Nobody knows the future. When you accept the fact you don't know the future, you see it a heck of a lot clearer. One day we'll get a bounce, and we could get a start of a really good rally. Are you ready for it? Are you prepared? That's the question you need to ask yourself. Are you ready to capitalize on opportunity? By the way, in these entire moves, did I ever look at any date? I'll show you something here. Tesla. We bought Tesla right here. You see this whole move? That was good for close to 550, 600 points on some of those shares. This entire move, honest to goodness, I never looked at a 5-minute chart. I hardly ever looked at a 10-minute chart. You don't need to. Take the bigger view and let the dang thing work. That's the key. That's where the bigger money is. It makes life simpler. And you'll learn this if you don't know it all over. A good trend pays more than all the wiggles with a lot less stress. And that's important to control your emotions. Less stress equal better decision making equal better profits. Anyway, I just wanted to share that with you. I hope it helps you. I'm always sitting there thinking, what did I need to hear when I started doing this back in 1986? What did I need to hear? By the way, I was there for the crash of 87, and what you're seeing here, for the market to do that, the market would have to fall 5,000 points in a day. All right? Just want to put that in perspective for you. So, and I'm not minimizing this decline either. Anyway, thank you all very much. Have a good night. Have a safe night. And we're always ready. Thank you.